Everyone dreams of being independent, living without burdens, and having the freedom to play by their own rules. Many people dream of traveling the world and moving from place to place, but not you. Your dream is to have your own house, work from there, and do what you love. One day, as you walk around the neighborhood, looking at houses for sale as you often do, you come across the perfect house. It has the best style, color, and look, but unfortunately, the worst price. You dream big, but your wallet is not big enough, and your smile disappears as you contemplate leaving. As you turn to go home, a young couple approaches you. You notice their happy smiles and wedding rings, and they explain that they are looking for their first house too. They asked for information about the neighborhood, schools, and nearby holiday destinations, and the more you talk to them, the more you realize that you know a lot about houses and the real estate market. You decide that your job will be investing in the real estate market, buying houses with potential at a low price and selling them for a big profit. In this way, one day, you'll be able to afford the house of your dreams. But just like any other business, the real estate market is speculative. You need to consider many factors before making any investment, and you'll be surprised to find out how many they are. Stick around to discover more, but before we continue, I'd like to know if you're finding value in this video so far. If you are, kindly like this video, and if you're new, welcome. Go ahead and click subscribe. Great, let's move on. When it comes to what makes a house valuable on an economic level, it's not just the physical structure itself that matters. While the number of bedrooms, bathrooms, and the general condition of the property do play a role in determining a house's value, there's another crucial factor to consider as an investor: the land. Yes, the land on which a house is built is just as important, if not more so, than the structure itself. After all, land is a finite resource, and its value tends to appreciate over time. This means that if you buy a property with a large plot of land, you're not just investing in the house itself, but also in the potential value of the land. When it comes to investing in real estate, buying a property with a large plot of land can be a smart move, as the land can be subdivided and sold off separately, or used to build additional properties. This can lead to significant profits down the line, as the value of the land continues to appreciate. When we think of a house, we often envision a beautiful structure sitting on a block of dirt. But what's underneath that house? That block of dirt is the land, and it's actually more valuable than the entire structure. You see, just like any economic good, a house tends to depreciate over time. It falls apart and goes out of style. However, land is a limited supply. We can't produce any more earth, and as the world's population rises, so does the demand for new land. This is where real estate investors come in. They understand that the land is what truly matters. To offset the depreciation of the structure, they choose the best location for their investment. So, what are the most important questions that real estate investors ask themselves before investing in a property? Firstly, they ask themselves about the location. Is it in a desirable area? Is it close to schools, shopping centers, and other important amenities? Secondly, they ask themselves about the potential for appreciation. Will the property increase in value over time? Is it located in an up-and-coming area? Lastly, they consider the potential for cash flow. Will the property generate rental income? Will it provide a steady stream of passive income? By asking these questions, real estate investors can determine whether a property is a good investment or a total train wreck. In the early 2000s, big oil fields were discovered in the Shell Valley of North Dakota. If you're not familiar with the area, just imagine a cold place in the middle of nowhere. The new oil industry created an incredible number of new jobs, and people started to migrate into the rural lands of North Dakota. Within a few years, the population had increased from 620,000 to almost 700,000. Of course, all these new residents needed somewhere to live. However, there was a shortage of houses and apartments in the area. This meant big things for the real estate market: loads of cash, new homes, new apartments, new condos, and, unfortunately, higher prices. But let's leave the freezing lands of North America behind for a moment. Let's head over to the hot and sunny shores of Puerto Rico, shall we? Sounds like a dream come true, right? Well, not so fast, at least, not if you're a real estate investor. Nearly 50% of the population there lives in poverty, and finding work is becoming increasingly difficult. Companies are shutting down left and right, making it tough to find buyers for your property. Sure, Puerto Rico may be a tropical paradise, but without jobs, people won't be moving there anytime soon. And as you know, without people, you won't have anyone to sell your property to. Job opportunities are critical to the success of any real estate investment. The first question you should ask yourself when considering a real estate investment is whether people can easily find jobs in the area. If the answer is yes, for instance, if there are lots of big companies and industries that offer a lot of jobs, then investing in real estate in that area could be a smart move. But if not, you might want to think twice. So how can you tell whether job opportunities are rising or falling in a given area? The first and most important step is to observe and ask around. Check with the local employment office, ask them questions and try to understand trends. Keep an eye on job trends before making any big real estate investment decisions. When it comes to real estate investment, job opportunities aren't the only factor to consider. Tourism is also a major player, as people love to travel and discover new places to fall in love with. The truth is that tourism has always influenced the real estate market. Take Aspen in Colorado, for example. It's another cold place in the mountains, but it's one of the most famous touristic locations in the United States. Families go there to spend the winter skiing and enjoying hot chocolate in their holiday houses. So, here's the second question to ask yourself: is the area where I want to invest a well-known tourist destination, and will it be relevant in the future? It's important to also take into account the supply of houses in the area. If there are too many houses available, the market may become saturated and prices will likely decrease. On the other hand, if there are too few houses available, the demand will increase and prices may skyrocket. For example, let's say you're looking to invest in a beautiful seaside location with many high-end properties and luxury mansions. However, if the market is saturated with these types of properties and there are no buyers, the prices will go down. But if a new big company opens up just 10 miles away and hundreds of new jobs become available, workers will be looking for more affordable housing options. This creates a shortage of first-time houses, which could be a great investment opportunity for you. To determine the supply of houses for every price range in the area you want to invest in, you can read reports from your local board of realtors or do a deep research on the web. This will help you better understand the real estate market in the area and make an informed investment decision. Yes, the neighborhood is also an important factor to consider when investing in real estate. It can affect the value of your house and the demand for it. For example, if your neighbor is difficult to deal with or if the neighborhood has a high crime rate, it could negatively impact the value of your house. On the other hand, if the neighborhood is friendly, has good schools, and is close to amenities like grocery stores and malls, it could positively impact the value of your house and the demand for it. So, when considering a neighborhood, you should look at factors like the age of your neighbors, the crime rate, the proximity to services like schools and grocery stores, and the overall vibe of the area. You can also talk to real estate agents and local residents to get a better understanding of the neighborhood and its value. In conclusion, investing in housing can be a good choice, as long as you consider the following 3 questions. Firstly, can people in the area easily find jobs that enable them to afford housing prices? Secondly, is the location attractive to tourists and investors from abroad? And thirdly, what is the availability of houses in different price ranges in that area? Of course, there may be many other questions to consider, but if you can answer these positively, then it may be a good investment opportunity for you. We hope you found this video valuable, and if you have any additional factors to consider, please share them in the comments and help the community grow. Thanks for watching, and have a great day. We'll see you in the next one.